Hello and welcome. Today's stock analysis is going to be GigaCloud. During our stock analysis, we're going to explore the key pillars, examine the ownership, look back at past results, we'll find out what the analyst predictions are, as well as giving the business a valuation, and examine the potential return on our investment, and finally we will summarise our findings. Let's find out about the company. The company GigaCloud was founded in 2019, but was then later IPO'd in 2022. GigaCloud provides end-to-end e-commerce solutions for large parcel merchandise. Its marketplace connects manufacturers in Asia with resellers in the USA, Asia and Europe. It specializes in large transactions such as home appliances, fitness equipment, furniture and other large parcel categories. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests that these are the key metrics when first evaluating a business. The first pillar we are going to explore is the earnings per share. This is where we take the net income and divide it by the shares outstanding. For GigaCloud, this is 130%, and it's a fantastic increase from last year. Now let's look at the free cash flow, which is the money a business can generate from its operations. And here we can see that GigaCloud have made some significant gains as their free cash flow is up by 55%. Then we come to the next pillar, which is revenue, and this tells us how good the company is at generating income before deducting expenses. Unfortunately, GigaCloud's revenue has decreased over the last year by 16%. Book value is calculated by subtracting the total liabilities from the total assets, and this indicates the equity growth for the company. So as for the last 12 months, GigaCloud's book value has lowered by 13%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and the return on equity. These two measures allow us to assess a company's efficiency at allocating capital under its control. Return on invested capital and return on equity are a very respectable 10 and 22%. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. In GigaCloud's case, this is almost there at 3.10. In this next section, we will now focus on other key metrics which will help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. This is very low at 27%, as we would like to see the gross margin at least 40%. Next we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. GigaCloud's operating profit margin of 60% is excellent, especially considering their gross margin is 27%. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for a company that has a free cash flow yield of 5% or higher. So at 9.38%, this looks amazing, especially since it's nearly double that target. After that, we come to the PE ratio, which Peter Lynch believes is a key indicator when evaluating if a company is under or overvalued. This is 15 and is at an acceptable level, as I like to buy companies that have a PE ratio between 5 and 20. The enterprise value to EBIT looks very good at 14 as well. Having looked at all the key pillars, let's give GigaCloud an overall score. I've given everything except from revenue, book value and gross margin full marks, so the key pillars for GigaCloud are 8 out of 11. If you're interested in reading the annual report, I've included a link in the description below. GigaCloud has a small market cap and Morningstar believe they have a narrow moat. Now let's look at the ownership. There are currently 2 super investors who own this company. If we look back at Ken Griffin's previous sales and purchases, we can see he has repeatedly bought GigaCloud shares totaling 116,000. Now Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. When GigaCloud first IPO'd, it was trading at about $40. However, it significantly dropped to about $10 per share in 2023. It's currently gone back up and is seeing a rise to about $33.50 per share. So let's see what the analysts think. On average, the analysts believe the company will grow by 10% over the next few years and represents a very good value for money at its current share price. Based on GigaCloud's health and past, they believe they've got a very strong future too. And the overall consensus is that GigaCloud is a strong buy. Let's use a growth model to build the valuation. So I will use the current EPS of 2.30 as my starting point when creating a valuation. Looking at GigaCloud's past and predicting the future based on the Analyst Predictions, I'm going to go with about 10% growth. I'm going to give GigaCloud a PE of about 20. After that, I'm going to project these numbers forward by 10 years. And this gives me an estimated future stock price of about $119 per share for its future share price. We then need to include a 15% return and work out the current value that Philtown calls a sticker price, which is $30 per share. And finally, we're going to apply a margin of safety, and in this case it's going to be a generous 50%, which gives me a buy price of about $15. However, if I also apply a 20% margin of safety, it gives me about $24 per share. If we look at the revenue and expenses chart, we can see that the cost of sales is a whopping 73%. However, GigaCloud do incredibly well with keeping their operating profit margin up at 16%. In this next section, we're going to split the chart into different zones. Our first zone is where we look back at being the market bottom for GigaCloud, and I believe this was about $5 per share. Then in zone 2, this is between $20 and $27. And we currently seem to be in zone 3, which is between $27 and $43. And finally, zone 4 is what I've identified as being our exit strategy, or at least the point where we take some profits off the table, which I've identified as being above $43. In this graph, we're going to compare the operating profit margin of GigaCloud, Kforce, Advantage Solution, Montrose Environmental, and GDS Holdings. By comparing the operating profit margin, we can see the relative performance between GigaCloud and its main competitors. And this chart shows us that GigaCloud are better equipped and more efficient at generating profits from their core business activities than its competitors. In this next graph, when we compare the return on invested capital between companies within the same industry, we can see that GigaCloud is outperforming most of its rivals. However, Kforce is outperforming GigaCloud on this front. When we compare the company's PE ratios, we can see that GigaCloud is similarly priced to Kforce. In this next section, we find out what our potential return would be if we bought at today's price of $35 and when the price was at $5. If the price was to hit the 52-week high of $43, then we would see a return of 23%. Whereas if you'd have bought GigaCloud at $5, you would see a return of 760%. Finally, let's summarize what we found out about the company. When reviewing the key pillars, GigaCloud scored a fantastic 8 out of 11. Under ownership, 2 super investors have bought in the last few quarters and no super investors have sold any shares. In the past year, we can see the average share price has started to trend up. Analysts are indicating that GigaCloud is a strong buy and they are predicting that they will grow on average about 10% over the next few years. My buy price for Gigabyte will be about $15. My final overall rating is 3 stars out of 5 and I've given this a category B rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comments section to help me develop the content I'm creating. And lastly, if you've enjoyed the video, it would be greatly appreciated if you could like and subscribe to help the channel grow.